Hi, and welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So happy to be back after missing last week. Hopefully, a lot of you saw ChartCon, which I was a part of. I thought it was a great event, and it was really great to see the studio that they have in place at StockCharts, beautiful, and meet some of the people there. Just a great group of people, as well as the contributors like me that I had not met. So it was all around a lot of fun. Hopefully, some of you guys got to see that and picked up some things from it. So in today's show, what I want to do is I want to discuss a specific question that came in related to why I use an 1840 moving average that's simple versus an exponential 1226 MACD. So let's go ahead and get into the agenda. And what I wanted to do, I decided to turn this into a lesson as to how I would go about learning an indicator, and at least the way I went about doing it. And I think it adds a lot of value. You need to treat each one like an independent school of thought. If you look at them all like the same, so if I use the same moving averages as I do in the MACD, then I'm basically looking at the same indicator. So, and then what I want to do is sort of build a weight of the evidence when I'm looking at this. And if I can get three different schools of thought all in agreement, start to feel a lot more confident in what I'm seeing. So once I'm done with that, we'll go through the stock requests that came through. So let's go ahead and get into this lesson now. So I'm starting with a weekly chart of the S&P. And we really could use anything. It was the one that I had up on here. And I do have the moving averages up, but what I would tell you is that as a starting point, when you're learning technical analysis, the first thing you want to do is look at charts with just the price and the volume. That's it, nothing else. And you need to be able to interpret what's going on. Now, what I would do is have a weekly chart on the left and a daily chart on the right and look at a lot of patterns while they're going in real time, because it's hard to look back on a weekly and a daily at the same time, like you're scrolling back and all that. But if you can have the two charts side by side with nothing on them, you should get a feel for how one time frame is going in could be going in one direction while the other time frame is going in another direction. That'll give you a flavor for multiple time frames, and it should help you define. You could put support lines in on the weekly chart and see where we get reversal taking place. And we want to start with the bars. If I'm going to go through and do analysis, the first thing you need to learn is each individual bar or candle. Understand what they're telling you. So that's the first thing. Now, what I've done is on this chart, I put on an 18 and a 40. Now, I do have the 4 up there, but for the most part, I'm focusing in on the 18 and the 40. And what I would tell you is learn this by itself. Don't put it in conjunction with the momentum. I'm putting together a course for my website, and I basically start with the candles, and then I work into trend. And trend can be really, I show 3 different ways that you can analyze the trend. You could do it with just the price bars, you can do it with a zigzag, or you could do it with the moving averages. And the moving averages are a very consistent way to evaluate trend analysis. But it's an independent way of doing it. And what I mean by that is I don't want the moving averages to give me the same feedback that I'm getting from MACD. And I don't want the feedback from MACD to be the same feedback that I'm getting from ADX. So what I'm suggesting for you is to learn each one of these as independent schools of thought. You don't want them to read the same. If I had everything, you want them to be able to work together. Okay, if I'm going to get a signal in the moving averages, I want it to be able to overlay in a signal in MACD. And what I have found, if I switch this over to MACD, now I don't have anything on the chart. No moving averages or anything like that. I just have the MACD and price. And my suggestion to you is if I'm going to learn MACD and I really want to study it, this is the best way to go about it. Learn it independently. I don't want the influence of what I'm seeing in the moving averages to have an effect on what I'm seeing on MACD. I want to learn, and the funny thing is when I learned MACD originally, I used a 20, 50, and 200-day moving average. And I only looked at a daily chart, but I studied the wiggles and what was taking place on that daily chart. And then once I understood and started to incorporate multiple time frames and looked at a weekly MACD and a monthly MACD along with the daily, I realized how powerful it could be just using the standard settings 12, 26, 9. So all the patterns that I mention in my book and on these videos, they're all the ones that I learned originally when I was using different moving averages. And that's okay. I mean, you can have different moving averages than I have. This is an independent indicator to anything that I have on in terms of moving averages. You want to learn it that way. You want to be able to get a signal from MACD and know that it's just based on MACD and price, okay? So that's one thing. And then you can look at the ADX, and I would suggest the same thing. Don't have any moving averages on here. Just look at ADX and the 3 lines and understand how they're working with the price pattern. Now, as always, I suggest to have 2 charts side by side when I'm learning this, at least 2 side by side. And I would go weekly and daily and get a feel for how, red DI could be in command on one time frame while green DI is in command on the other. The ADX might be strong based on the buyers in one time frame, and it might be strong based on the sellers on another time frame. If you can start to get a feel for that, then we can start to understand how to get confluence amongst different time frames. So this is my suggestion to you. If we're going to go and look at an indicator, don't worry about it having these corresponding line numbers, meaning I don't need a 12, 26 moving averages that are exponential to correspond to my MACD, because I want MACD to give me one sign and or one signal, and my 18 and 40 to give me another. Now, if I know the 18 and 40 is giving me a signal, and I know the MACD is giving me a signal, and I know the ADX is giving me a signal, all at the same time, now I've got what I'd call a weight of the evidence in place. And those are where it can get really powerful when you start adding all this together and then going into multiple time frames. So keep this in mind. If you're trying to learn technical analysis or any one of these individual indicators, my suggestion is to go bare on the moving averages. Don't put anything up there. Just learn price and the indicator together. And then once you've gotten a really good feel for the indicator itself, then you can throw the moving averages on or look at ADX or put it all together. All right, let's go ahead and get into the individual stocks now. Just briefly, my services can be found at rabilstockresearch.com. So just so you're aware, the individual package right now, you can use a coupon code StockTalk to get the first 2 months for $50. That is not going to be there that much longer. Working on a curriculum for basically a course on technical analysis and trading that's going to be a part of the individual package. If someone's on the individual package, they're going to get that automatically. So I'm not going to have the discount for that much longer. So anyway, just check it out. It's on rabilstockresearch.com. Let's go ahead and get into the individual stocks. So I'm not going to do the S&P today because I did it on Tuesday for your daily 5. My suggestion is to go listen to that. It's 10 minutes. It gives you a pretty good idea. I did a bigger picture version, so I'm looking at even a quarterly chart to show the quarterly 18MA. Definitely worth a look. I talk about the fib levels and stuff like that. So actually what's taking place today, this morning, doesn't really change my thought process from Tuesday. So go ahead and check that out. All right, let's start with the TLT. I've got a lot of charts that came through over the last 2 weeks, so I'm going to try and get through as many as possible of all the requests. Okay, so TLT, I'm going to do a couple indexes that were requested. So TLT, the one thing I'll tell you here is that I know that this is showing divergence. Do you see how this is a higher, MACD is a higher low here, even though price is a lower low? But look at the dramatic new low that's taking place. This isn't real good divergence in my opinion. I think this could lead to a minor rally back towards the 18-week, but in terms of like looking for a reversal, I don't know that I'd be looking for that. You can see the momentum is very strong here based on the MACD on the monthly and the ADX, and the ADX remains above 25 throughout. Look at the rising ADX on the daily chart. So got to be careful here looking for a bottom quite yet. Okay, USO. So this is kind of intriguing, and it does explain something that I look at. So on the weekly chart, we had a zero line reversal and low ADX. So typically what I do is draw on a downtrend line and look for a break of the downtrend line. You see how that would have been a break of the downtrend line? The problem is you're running into a declining 18 weeks. So I don't like that. I don't like to take that downtrend line break. This is just so you're aware of this, because I know that's one of the signals I look for. But the problem is with a declining 18 week, what's happening now actually makes sense to me. What I like to see is can this come back and hold and then turn back up through this area? That would be very bullish. Or if it can push through, then I like to buy the first pullback as this is cupping around. So nothing to do right now, but this is still set up with a rising 18-month underneath. We've got a pinch play that has developed. We've got good green DI. I mean, this does not look that bad, but it has to trigger by coming back up above this prior high at a minimum now. And I would actually like to see it maybe cup around a little bit more. So AZPN. So the question here was, yeah, we've got this price pattern that's kind of pretty decent looking on the daily chart. It has now been confirmed by MACD and ADX. When this was sent in, when this request came in, at that point, MACD had not confirmed. But you got to realize that's only potential divergence. We have to have price to confirm a divergence. And in this case, we actually have that now. The problem I've got with this isn't the divergence, because all the momentum characteristics are really good. What I don't like is that this is really stretched here, and we're getting stretched here. We've got pullback risk. Okay, when you get too far away from the 18-month and the 18-week, you have pullback risk. Now, I mean, as long as this stays above the 18-day, it's okay. But if we start to break that 18-day, then you start to realize you've got some pretty big risk on the bigger time frames. Okay, so another question here related to this price action. We had this really strong move kind of in a breakout fashion, right? And then we start to pull back. And the first thing is that when we break out from an overbought condition, we always look for some kind of a pullback. So we've been getting that. We did have confirmation on a MACD and an ADX basis on this move to the upside. So that's all good. But as we're watching this pullback, we're now looking for this opposing pattern, this 18 crossing down below the 40, and then we're waiting for price to really get back up through resistance here. So nothing's happened. And what I've been telling my subscribers is that there's a difference between a setup and a trigger. Okay, the setup is what's taking place on the bigger time frames. The trigger is what takes place on the smaller time frame, in this case, like the daily chart. So nothing happens here. It doesn't harm you to have this on a watch list. It only harms you if you just decide to buy it just because it looks like it's breaking out. If you wait for the proper entry point based on the trigger, then you would have never been in. And now I would say this is a failed new high and there's nothing to do here. Maybe this can hold the 18 on the weekly and kind of rebuild itself a little bit, but I would be a lot less inclined to do this now that it's really failed at that high. Same thing holds true here. So we have a nice setup in place for a trading play, but we don't have a trigger. And we still don't have a trigger. And you pretty much could draw the downtrend line here. We've got a zero line reversal, low ADX. Now, I want to point out a couple things. Number one, you see how the ADX on the weekly did not get above 25? So that changes my thinking in this and I turn this more into a trading play. I can play this, but I'm playing it tighter. I'm looking for targets quicker. I'm playing it for a trade. I'm not looking for this to be a big move on a weekly chart because the ADX didn't confirm by getting above 25. DI did, so yeah, I could take it for a trade. But I want to see confirmation on an ADX basis before I'm looking for a next big, real huge move to the upside where I can look for a trending play. NBIX. So, there are signs of improvement. Obviously, you can see this on a relative basis. See this relative strength line or relative performance line? You see how this is hitting new highs? All good from that standpoint. We had low ADX here and we had low ADX here. So we look at this as a breakout pattern coming up through here. The problem I've got with this and what I've been saying is that I don't really want to buy the breakout in a bear market. What I want to do is wait for more confirmation, see this turn up like that, prove that it can hold the breakout level on a pullback. This is not doing that. So now we're looking at more of like a consolidation pattern, kind of back inside the trading range. And we need this to set up over again. I would say at least get back up through 110. I want to see a really strong green bar to prove that it's really breaking out of here. You don't need to be in a big hurry in these patterns. Wait for more confirmation right now. Utilities are really getting pounded. This is actually down into the lower end of support, right around 70. And I do think this is going to find support here, but a lot of violence in the decline. I would now expect some resistance as we work our way up into the mid to high 70s. Just a lot of damage being done on a short-term basis after being a really good relative performer for the majority of this year. It's kind of giving back a little bit. This is, this is basically, we're in an environment now where there's very little places to hide in this environment. I mean, most of the areas that have been holding up are starting to get hit pretty well. The only area that hasn't been hit has really been energy. Okay, ENPH, I want to do a follow-up. I had a question about this. So this was hanging up in this area. It was a strong move, but it had a little bit of pullback risk, and I think I mentioned that. Now, because it's pulled back, and it did it in such a violent way, we're breaking the 18 week, and we've got this rollover taking place in MACD. I think you can put this move on hold. I don't view this. It could still be, if we turn really quick, like we'd have to turn really quick before this 18 can roll over, then you can still play this as a pullback trade weekly, daily. But my thinking is that now that we've re-entered this breakout, that it's going to take more time. Toll Brothers. So, the weakness here, it's not all that surprising based on what we've seen in rates. I think the big level to watch is up here around 50 on the weekly chart. This has been a big number. See this number here? It acted as resistance and then it acted as support. It didn't quite make it here, but then we failed and failed again. Until we get through that 50 level right now, I just don't see this being anything all that exciting as long as we're staying in this range. Now, if we come into the lower end of the range, if we work our way all the way down, I guess I should tell you that 40 is pretty important. If we don't hold 40, then we probably are headed towards 30. Let's look at CHD. Really violent move in some of these defensive stocks recently. So we got the utilities getting hit. We've got defensive consumer staples getting hit. That's what I was saying. Like, it's very hard to hide in a bear market, especially when it gets this ferocious. We get a lot of movement out of the market. So instead of rotation, we're seeing money exit. That's what it looks like. Now, we've got resistance around 80 on this. If it can get a bounce, I would probably use that as an opportunity to exit this. If you do get that opportunity, it's just a lot of damage being done, and it's probably going to be a waste of time. Okay, so NTR, I like what this is doing. It's a setup. It's set up, but it isn't triggered. Okay, so we've got this nice pattern forming. We've got good ADX here. The way this is consolidating back towards the 18-month after getting extended is really healthy. And then we've got this kind of zigzag sideways working where we're consolidating, and I think in a pretty healthy manner so far. The sellers are not showing up on the weekly chart. We don't really have a lot of strength to the downside on the daily chart. But what's missing here is we need a trigger. And we're going to really need to come up through this downtrend line on the weekly chart and looking at it from a monthly and a weekly standpoint. I think if you trade this off the daily, you could get caught in noise. So focus on the weekly. 100 area is probably going to be pretty important, but watch the downtrend line. I think that downtrend line is going to add, is going to tell us a lot here. Don't be in a big rush right now until we can get that trend broken. Okay, so another stock. So this is a great example. Let's just take a quick peek at this. You notice when this went to a new low right here, this bar, MACD was still way up here. So I refer to this as potential divergence because if we keep dropping, like this is done, then now we get confirmation. Now, when you look at it on the chart afterwards, you say, well, there was no divergence. But that's not really true. There was potential divergence in these first couple bars until this actually went to a new low. So be really careful about divergence. This is why I use multiple time frames. If I get divergence in one time frame where this is going to a new low and this is making a higher low, I go to the smaller time frame and look for a reversal. We never had that, and then you never get caught in a divergence pattern that ends up failing. So now we're at a new low, a pretty dramatic new low. We got to look at the next area of support. We're starting to come into here. It's actually a little high. We got this kind of range somewhere between 50 and 55. You know, the likelihood is we are going to find support in that range. The problem we've got is how much damage is being done to the trend. And I don't see any reason to do anything to the upside on the long side as long as we stay below this declining 18. Look at this failure. We didn't quite make it here. We made it pretty close here and failed. Made it here and failed. This line is the key to this trend right now. We're not going to turn the bigger time frames until we can get through this 18 on the daily chart. Okay, PayPal is what I refer to as the injured athlete syndrome. And that means that we're not going on the 15-day disabled list. This is not the kind of, this is like a football player that gets hurt and he's got a season ending injury. Okay, you're going to go through a full season and maybe two before this is really ready to go. So I'm saying 6 to 12 months of sideways, consolidating, mending, going through a rehab phase after the damage that's been done here. Okay, so this is not something that you want to play around with unless you're trading. There was a great trading move from the low 70s up to 100, and now we're probably working our way back down to the 70 area again, and maybe another trading move will show up while it's forming this new basing pattern. We're forming a new level of support, which is going to take time. Okay, so CSIQ, another one that I actually had been highlighting, and no harm, no foul, okay, because we had a pretty nice setup here and a pullback. You see how the strong move here, and we had green DI showing up after a reversal. So when we get a reversal pattern, I don't need ADX to confirm. I just want green DI to show up. We had that. The problem is when you pulled back, look at what happened on the daily. The 18 crossed down below, and then you stayed below both the moving averages and even the 18. MACD overran. We have no trigger here. We had a setup when it was down around 39.40, but we never had a trigger. Learn this and it'll save you a boatload of money. This is what I've been repeating over and over again in the patterns that I'm looking for on to my subscribers. It's just not, you don't want to get caught in these patterns, these pullback patterns, and just buy them without confirmation on the next lower time frame. Okay, so Allstate, again, look at this on a relative basis. See this black line? That's the relative performance line versus the S&P. That's essentially saying that when this is going up, it's outperforming the S&P. And it's been doing it all year. Been a great stock on a relative basis. But that doesn't mean we're making any money. What I'm looking for are stocks that have good relative performance where they're making higher bottoms while the market's making lower bottoms, but I also want to see momentum show up, and we have no signs of momentum yet. So until that happens, when we have low ADX and low ADX, let this break out, let the ADX get going on the smaller time frame, and then look to buy the first pullback. So be patient here. It still should be on a watch list, but it's not something that I would consider to be an active trade yet until we get signs of momentum showing up on the daily chart. So GLID, look at what's going on here. I find this kind of interesting. You see how the relative performance had been pretty weak and ugly, and now it's starting to show signs of improvement. Okay, this is an emerging relative performance line as opposed to something that's been going up, up, up and away. This is a more intriguing relative strength to me. Now, the problem we've got is that we're caught in this range. Now, there is a massive amount of support nearby. That's another good thing. What's missing is getting back above this key level up here around 68, 69. I mean, we need to get back above this ugly reversal here. Right now, we're caught in a range. Support is probably like 60 and resistance is up here at this level up here. And until you can get through that, I wouldn't do anything, but I would keep it on a watch list again because of what's going on a relative basis, emerging relative performance. And we've got a lot of price support here. So CROX had this damaging decline, this massive decline to the downside, and it looks like it's found pretty solid support at the 50 mark. Now we're moving up and we're going sideways. So let's just understand multiple timeframes and what it can do for us. So on a weekly chart, I've got this pretty healthy looking pattern. I mean, we're below the zero line here, but we got this nice little consolidation taking place. The sellers are not strong in this minor pullback, and we can see that based on the daily ADX. Red got up and then gave it right back. So from this standpoint, this is kind of healthy, strong move and then a consolidation. Now, if I'm going to play this, I have to play this for a trading play, and I know that the 100 mark is a big deal. We got the 18-month, and in fact, it might end up being lower by the time it rallies. And we have to use the 18-month as our target here. So we could get a trading play, but you got to be really nimble, and we need some strength here getting through 80 again to kind of confirm that we have a trade take place. So it's worth watching. It's worth keeping an eye on, especially if the market makes some kind of a climax here. But let's just take a quick peek. So yeah, we're trying to come back a little bit today, but not in a position to get all that overly bullish yet. But keep stocks like this on a watch list. Last stock, WBA. Now, I know this is a reversion to the mean potential, and we've got a little mini divergence here, but just play it to a move up to like 35, 36 if you're going to do that. And you have to do it off the hourly chart if you're going to do it, all right? Be real careful with this type of pattern right now. Thanks for watching the show. My research can be found at rabelstockresearch.com. If you have any symbol requests, send them to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.